Hello and welcome to episode 13 of Southbank Live, our live show where we discuss interesting trends in the markets over the past week and some of the stories that you might have missed. Of course, this is a live show, so if you like, you can leave a comment or ask a question to us. It'll be myself and John Butler most weeks, though we shall have other guests on over time as this develops. This is something of a new experiment for us, so do bear with us. I know noon is not everybody's best time. We were experimenting with 10 in the morning being the time we broadcast. We're just moving it around and seeing what works best for everybody. But that said, my name is Boaz Shoshan. I'm an editor here at Southbank Investment Research, and I'm joined today by John Butler. John, how are you getting on?
Very well, very well. Thank you.
Now, we have a huge amount to discuss this week, John. Last week, we were discussing the Evergrande debacle, the grey rhino risk striking financial markets. And since then, it seems like a lot of people have gotten very afraid of this problem. Just to check in with Evergrande, what's your take on the situation as it stands today?
Well, so far, I mean, based on our discussion last week, so far it has developed along the lines I would have expected. That is, people have taken notice. It is a big event. There has been some nervousness in markets, but it's pretty limited because the general view is that China is not going to allow a full-on meltdown a la Lehman Brothers to happen because it would simply be too politically embarrassing. And indeed, before they even let Evergrande go to the wall, they probably had a working plan in progress for how they were going to work this out and allow it to happen while being as least disruptive as possible. Now, they've gone one step further, which is an interesting one, which I also had thought about previously, although I did not mention on last week's call, which is that they're taking a leaf out of Russia's playbook. You might recall that in the late 1990s, largely as a result of very low oil prices, Russia had to default on its debt.
Yep.
But they did so selectively, defaulting only very, very little, if at all, on domestic holdings of their debt, but allowing foreigners to take a much larger hit. And that was seen, of course, as very politically driven. But hey, what should we expect here? I think this is actually something that is entirely in keeping with the mentality of the CCP. That is, we're going to favor domestic over foreign creditors. And in a way that establishes an important precedent, though, for the foreign creditors, because this is not going to be the last time a major Chinese property conglomerate or other large leveraged entity is going to need some sort of restructuring, right? Some sort of whatever it is going forward as the Chinese economy slows, rebalances, goes through a more typical business cycle, whatever it might be down the road, right? And so I think foreign creditors are going to have to reassess their exposure to China, and that could lead to some spillover. And you saw some of that this past week.
Yep.
That is, certain other firms related to Evergrande also selling off hard. That may not be over, as again, this foreign creditor reassessment continues apace. And indeed, to the extent it spills out outside of China, some of those foreign creditors who get screwed by this, right? They may be highly leveraged. They may have lines of credit to major banks. Those major banks may decide they have too much exposure and they want to rein everybody in with a small margin call. This is not over yet.
Yes, it does seem like this is going to be more of a process rather than an event, whatever does end up happening with Evergrande. John, over this past week, I've heard some commentators take the line that China will allow Evergrande to default as almost proving to the West of the world, or to the rest of the world, or to the West specifically, that it is more capitalist than the West itself. So in not allowing the two big fail banks to fail, China will sort of make itself look like it was actually, we're doing capitalism properly. It's you guys who got it the wrong way around. What do you make of that idea?
Well, that may be part of the spin and the narrative control, but I would not believe for a moment that the CCP is not already prepared to protect those who they believe should be protected. And while it may officially be some sort of default, believe me, there will be, as necessary, liquidity injections, bailouts, emergency loans, whatever it is, to preferred entities, whoever they might be. And that might be a very long list indeed. So yes, the message to the world is, nah, 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 we're more capitalist than you are.
Yeah.
But the reality domestically may well be something that is just as socialist as what one would expect, given the tradition here.
Yes, quite. When you're thinking of potential spillover that we might then see over the next week, for example, John, is there anything specifically you'd be looking at, sort of emerging markets, any countries outside of China that you think would get the brunt of the pain first?
Well, this is where, yeah, this is where you have to start drilling down into the detail, which ultimately is what you have to do to make intelligent decisions about this sort of thing.
Yeah.
Macro thinking only gets you so far. And as I mentioned a moment ago, one of the weak links in the chain here is that you will have some leveraged entities in the West, hedge funds, for example, who will be heavily, heavily reliant on lines of credit from major banks. And they may find that they need to, that they're effectively forced by their creditors to significantly wind down their exposure, not only to Evergrande, but any associated institution. And in some cases, those institutions could be lumped in with, say, property development firms in other Southeast Asian economies who are next door to China and who may have similar risks involved. And so this could begin to spill over that way. I mean, think about all the development going on in Indonesia, which is not a small country, right? That's a big market. And it's a market which, unlike China, is hugely dependent on foreign capital, much more so than China is, right? Don't get me wrong, China needs some. But Indonesia, they're overwhelmingly dependent on foreign capital for their development. And so if Indonesian property firms start running into trouble, guess who is primarily getting hit in that case? Foreign creditors.
Yeah.
And Indonesia may see also the way that China is selectively defaulting primarily on foreign creditors. Indonesia may see that as a nice, fresh precedent to do the same.
Right.
So, watch this space. Again, this is not over yet.
That's very interesting. Sort of how the domino topple, but almost as in behavior rather than just in terms of where capital flows. Trump winner comments in the chat. Vietnam as well. What would you see sort of the risk there with Indonesia similar to Vietnam?
Well, I don't think Vietnam has invited quite the levels of foreign speculation that Indonesia has. I'm sure there's some there, and I'm hardly an expert on either country. But what I would say is that if you take a look at classical measures of emerging market credit exposure, such as their current account deficits, the amount of export cover they have in their reserves, and so on and so forth. The back of the envelope view here, to kind of mix metaphors, is that Vietnam is in better shape to weather something. But believe me, I mean, how important that is when panic ensues, if it does ensue. No, I mean, if China's experiencing this issue, if Indonesia is experiencing this issue, then Vietnam, which lies directly in the middle, there's no way they're going to escape completely. But on paper, they look a little bit more solid to me.
Right. Now, we have taken a look at Evergrande, of course, for the beginning of today's show. I did title this show "Winter of Our Discontent," as there is a dynamic I'd like to explore with you, John. Before we do get to that, if you are watching this, thank you very much for tuning in. Good morning, well, actually, good afternoon to you, Trump winner. Thank you for your comment. Do feel free to leave any comments below this video if you're watching a recording, or of course, to ask any question if you're watching it live. Now, John, on the topic of the winter of our discontent. This is making an allusion to what went on in the 1960s and the early 1970s. You see the economic conditions today as quite similar in Britain today, as quite similar to the way they were in the 60s and the early 70s. Obviously, the 70s became really not a very nice time for, especially if you're an investor. Thankfully, I was born much later than that, so I don't have memories of it. But I'm very aware of how bad a time it was. So I would like to avoid a repeat of that in the future. And here we are today, and there are massive queues outside gas stations. People are really struggling to get access to fuel. The costs are very high. We've seen UK gas companies effectively go bankrupt just over the past week. It does seem, I mean, the comparisons are quite prescient.
Yes, indeed. Now, the actual term "winter of discontent" was originally specifically coined to characterize the winter of 1978, 1979. However, the set of conditions that led to that were already very much in place off and on through the late 60s and 70s. And it kind of finally boils over and acquires a more overt political element by then, where you have very, very active trade unions and whatnot at that point. And so it's when what begins as largely an economic crisis builds and builds and eventually becomes a political and social crisis too. And by 78, 79, that had really that had absolutely positively happened. And I'm not suggesting that we're already quite that far. I am suggesting we appear to be on a similar road.
Yes.
And whether it's this winter or next winter, it could happen, right? It could happen. The fact is, you have a very similar toxic cocktail of brewing here, where you've got this energy price shock, which is obviously very substantial enough to cause outright distress in not only the gas industry.
Sorry there. We have had a little bit of technical difficulties. I believe we are back online now. Just to go back to where we were speaking, John, I was just commenting, of course, about the winter of discontent and how we've started to see a lot of shortages now of things like gas. But you speak a bit more on just in terms of supermarket goods and the shortages we're seeing there. Could you expand a bit on that and what you think the knock-on effects are going to be?
Well, again, these things are all related, right? So, it starts with the spike in gas prices, which has multiple causes, including that fire down in Kent when the transmission of power from France was cut off and still has not been restored, is my understanding.
Right.
That will take weeks, apparently. So anyway, but now you're getting all these downstream effects now. It's affecting chemical and fertilizer companies. It's going to begin to affect food production. Actually, it already has apparently begun to affect food production. That's going to affect obviously the retail food industry, not only big supermarkets, but even smaller food retail distributors. And all along that chain, very difficult decisions are going to have to be made regarding to what extent these shortages and price spikes are going to result in big margin hits, to what extent they can be passed on to consumers, and very difficult prioritization choices will need to be made. And in a world where everyone is dependent on just-in-time inventory, where everything is so finely tuned that there's very little margin for error, and yet many possible points of failure, the people actually running these firms, they've almost never experienced this. And they may have some general idea what to do, but before they have specific solutions to specific problems to try to sort it out, could be weeks, months, or a full annual cycle, right? It could take a long time. And so I think that sadly, this is not a problem that it's not a problem also the government can solve. Oh my God, if the government starts getting involved saying, oh, there's going to be price controls on this now, there's going to be quotas on this now, that will take a bad situation and make it potentially disastrous. So let's hope they don't go there. But the point is this: not only should we expect a potential inflation spike coming out of this, but we should also expect a lot of corporate profits to warn to the downside, that they're just not going to be able to maintain the margins and the volumes over the next few quarters that their investors had come to expect. So this can be negative for just about everybody. It's a true supply side negative shock with no easy solution other than just time and patience. And in the meantime, everyone is going to take a hit.
Yeah, it does seem quite worrying when you see all these energy companies getting into a really dire straits when you're talking about companies going bust. You've got plenty of customers. Just over here from my own anecdotal experience, it's very hard to get a hold of the energy company that supplies this house, and so you wonder whether or not they want people to effectively not get in touch with them and then get flipped onto variable rates where you will have to pay much higher prices. It is interesting to see Kwasi Kwarteng, who is the Secretary of State for Business, Energy and Industrial Strategy, who's really one of the major sort of Thatcherite, one of the major Thatcherite pupils, as it were, of the 80s, who has now taken quite a different anti-market approach when it comes to price caps and things like that, and indeed windfall taxes on policy profiteers. This is not something that you'd really associate with a very free market individual, and yet in this environment, that is what politicians are wanting to do. So I doubt we are anywhere near the end of all the consequences of this. John, back in the 70s, there were stories in the States where gas stations were only accepting silver in payment for their petrol. And this was, of course, after you had US went completely off the gold standard. Silver had already been demonetized by that point. Do you think we may return to something like that?
Well, I don't think that the same mentality currently prevails.
Yeah.
You had pockets in the U.S., in particular in some of the western and southern states, where people were shocked and horrified that the U.S. had dropped its gold backing and thought that there was going to be, severe prolonged inflation indefinitely, and that one of the simplest ways to protect yourself was to try to, do your day-to-day commerce, especially in terms of what money you were receiving for day-to-day commerce, to do it in the silver coinage that was still available at the time. Uh, I don't think that mentality prevails today, at least not in that sort of specific sense. But in a more
Yeah.
general sense, the fact that people, including merchants, businesses, and obviously individuals, the idea that people are waking up and see a very pressing need to protect themselves from inflation, which is rising faster than it has for an awfully long time now. I'm sure that the general sense there is taking place, but specifically what actions people are going to take to try and get ahead of this and protect themselves, that'll be very different than accepting silver coinage exclusively for, whatever product or service you're providing. But it is changing the mentality. It will change the way people think. And indeed, the main reason why, of course, there are queues at the petrol stations today in the UK is not because there is already a shortage of petrol at the pump. It's because there is anticipation of a coming shortage, imminent coming shortage
Yes.
of petrol at the pump. And when that arrives in a few days' time or a few weeks' time, everyone wants to have a full petrol tank. But now extrapolate that mentality to everything we do. If you're worried about food this winter, you're going to stockpile food. And if you're worried about any other essential item that you'll need
Beer,
to get
for
through
example.
the next, whatever it is, right? Whatever it is for the next weeks, months, to the extent you can, you're going to begin to front load purchases. Well, obviously, supply cannot respond that quickly. So guess what happens? Rising inflation becomes a self-fulfilling prophecy. That is, rising inflation expectations becomes a self-fulfilling prophecy because consumers go out in advance and they front load purchases and hoard goods, taking out the available supply float. And the only way to clear the market then is with higher prices. It's starting with petrol and food and a few other things. But this idea that it's not going to spill into all kinds of other stuff is wrong. It will. And so anyway, we're really in the early stages of this. And anyone who still talks about this being transitory is either simply totally blissfully unaware of what's going on, or they are deliberately deceiving someone to support some narrative or agenda.
Yes. On the topic, as you say, John, of prices can only rise when you get that change in psychology where people are just piling into the market, wanting to buy whatever it was. Remember, so I was almost quite remembering March 2020 when you were just seeing people with armfuls of toilet roll everywhere. And obviously, you can buy hand sanitizer anywhere. Everyone was just so afraid. But on that note, when it comes to prices can only go up. Trump winner comments again. Government has announced price caps for natural gas energy in the UK to help protect consumers. You said government actions like this and quotas, etc., could make the situation worse. Can you explain? Now, if you mess around with price, you're going to mess around with supply. And John, I mean, when it comes to price caps, you generally end up with big shortages of whatever it is you're trying to cap the price on, correct?
Yes, that's correct. And so when you try to cap prices, that may seem absolutely fine initially, but as time goes on, what's going to happen is producers will realize that at least some marginal producers who are relatively expensive producers, that they simply can't make a profit. So they will reduce or completely shut down production. And so you'll end up with shortages over time, even if that's not visible initially. Now, traditionally, what politicians do when their price cap policies result in shortages is they then pass the blame.
Yeah.
They pass the blame onto the producers, saying, why aren't you still producing as much as you were before? And they try to make them look like the bad guys. And this is how the game is played, right? Nobody wants to be responsible. And so, there's this sort of bait and switch, there's this time delay mentality or time inconsistency policy where everyone's maneuvering to pass the blame on to someone else. And of course, this is what politicians do for a living. They're very good at it, right? They're very good at persuading, deceiving, because that's how a lot of that game is played. But the reality remains the same. That is that the private sector suffers, households suffer, businesses become less profitable, and it's a loss all around. Now, of course, it may be deeply politically unpopular in the short run to allow prices to soar, okay, but those prices soaring, again, it's temporary, because when prices soar, they stimulate a supply response.
Yes,
And that supply response may take a few weeks or months to show up, but once it does,
it will. Yeah.
it solves the problem. So, and then you don't have this lingering blame game, which can get you into a vicious spiral where, because no one's willing to admit that they were responsible, no one's actually willing to take the actions required to let the system finally sort itself out. Whereas if you just let the system sort itself out initially, fine, it will be unpleasant for a short period of time, but the market will solve the problem. And I wish that the government would state more clearly that they understand that and that they would like the public to understand that, but I don't think they're even going to try.
No, I don't think so either, I'm afraid. High prices are the solution, the cure for high prices. But that statement is made, of course, with a caveat that unless somebody intervenes and prevents high prices from actually being levied in the first place, which it does feel like we are getting close to, which again is another throwback to the 1970s. When Richard Nixon did take the dollar off gold, it wasn't just that. It wasn't just that announcement that he made. There were plenty of other things, including, I think it was wage caps. You had price caps on various goods as well. So here we are 50 years later, and it does feel like we're seeing history repeat a little bit.
It's also, I mean, keep in mind, it is no coincidence, right? Nixon's economic advisors, including Paul Volcker and some other very prominent people at the time, they told him very clearly that if you delink from gold, the dollar is going to devalue. There's just no way to prevent that happening. And you will see a surge in energy prices, food prices, and eventually spillovers into the general price level. They told him that. And so Nixon, thinking like a shrewd politician, he's thinking, oh, okay, well, what can we do at least to make sure that big surges in prices don't occur immediately so people don't associate it with my decision to delink to gold? So they say, aha, let's have temporary wage and price controls. And so they had those in place for a few years. Then they remove them. And of course, you get a second wave of inflation coming through when it does. But Nixon's already out of office. And it's Ford and also poor Jimmy Carter who inherits this. And it had nothing to do with the policy. But the wage and price controls were announced with the dollar delinking, closing the gold window decision, absolutely as part of a master plan to hide the truth, to obfuscate just how damaging this decision would be to the rank and file U.S. Household and business community.
And of course, covered his back at the same time by saying it was the international currency speculators who were to blame for all this.
Absolutely.
Nothing to do with the government.
Absolutely. Who can't love to hate the international currency speculator, right?
Who's going to be on their side? Who's going to be cheering at the stands for the international currency speculators? And so again, here we are today, where we're seeing talks of profiteering by the energy companies which haven't gone bust. These guys are the enemy. How dare they be staying in business during a massive shortage? But John, looking more, so of course we do see this as the beginning of what looks like a very sort of inflationary era. But looking forward just to this winter, just for this last quarter for the year, what do you think we're going to see? Because I really do think winter of discontent might be something that we see a lot more of actually just this winter.
Well, look, I mean, if things get bad enough fast enough, then it will make people angry enough to begin to take some of the social and political action which was taking place in 78, 79. I mean, it may take a slightly different form today, and I, obviously, for example, the strength of the unions isn't the same, but that doesn't mean that there aren't ways in which workers can still organize to cause trouble, and you'll start to see maybe some of that. And so look, I mean, I honestly don't know, but what I will say is this: is that I suspect that over the coming months, a a more ordinary frog boiling in water mentality will go away, and people will start to act. They won't just stand for it indefinitely. And I don't know, I don't know what the magic event or series of events would be for that. But if inflation is north of 5%, if supermarket shelves are only half full, if you have to wait, an hour or more to get petrol in a snowstorm, I mean, these are the sorts of things that change, that they qualitatively change the way people think and act. It could happen this winter. You can't rule it out. And if it does, it is going to be of a grave issue for the government, because in a way they own this one, right? There's no way that Boris and company can possibly say, oh, none of it has anything possibly whatsoever to do with our decision to proceed with Brexit. None of it could possibly have anything to do with the extremely unprecedented, heavy-handed lockdown policies that we implemented. They kind of own it, and they won't be able to walk away from it. So what I said earlier about, oh, they can obfuscate, they can delay, they can whatever, that might be very difficult this time around.
Yeah, which and then what else are they going to do? I mean, it's probably just going to lead to even more intervention, I would imagine. As you need to be seen to be a man of action. We need to
Well,
be
I mean,
doing
I,
this.
I mean, I mean, not to discredit her in any way for what she did at the time, but there are those who believe that de facto Thatcher's prime ministership, Thatcher's government was practically saved by the Falklands War. That is, how convenient that when things were really getting tough for her to keep her cabinet together and keep everyone on side and keep forcing through her policies, which were deeply unpopular with a huge portion of the electorate. How convenient to have the foreign military dictator suddenly give you an excuse to rally the country around the flag. So look, I don't, again, no discredit to Margaret Thatcher, but if Boris has learned from that episode, then again, this is pure speculation on my part, but gee, wouldn't it be interesting to manufacture some foreign something or other to distract the public if things get really dicey?
Yeah, I mean, I guess in this scenario, you'd be looking at sending HMS Queen Elizabeth into the South China Sea. Just
No, don't do that. Don't do
well,
that.
you'd certainly end up with a conflict. A reason to be proud of being British in the Royal Navy and standing up to the CCP, the big bully. Of course, they're not exactly innocent in an awful lot of things. Maybe we will see that as this situation continues, because of course inflation now is not just a developed world phenomenon. This is very much what we're seeing from all the supply shocks and then from all the money printing. This isn't contained just to the countries in which they print the money. It spills over into all manner of things, not least commodity markets. And of course, everyone needs commodities, and if the price of commodities go up, well, everyone feels the pain as a result of it. We do have a couple of comments here in the chat. Tea Cafe asks, "Should I sell my Doge?" Which is a nice light-hearted interlude we could put on here. Of course, we can't give financial advice on Southbank Live. This is for informational and hopefully entertainment purposes only. But in terms of Dogecoin, and where it stands today, probably Sam Volkering would be your man to be asking whether or not you should sell your Dogecoin. Funnily enough, I actually gave my girlfriend, I think it was 12,000 Dogecoin, just as a joke gift, but this would have been back in 2018. Just because Shiba Inus are very nice dogs. It's a very funny little community that Dogecoin has. So I gave her 12,000. I think it cost like £25. I put it in a paper wallet and I gave it to her. And lo and behold, here we are today, and it's probably worth a couple of grand by now. Just from and probably would have been worth a lot more during earlier this year when Elon Musk went on Saturday Night Live. I think it got up to about 76 cents per Doge. So that was worth a fair bag, all that Dogecoin. She still got it, of course. Maybe it'll hit $1 one day, but I'm afraid we cannot give any specific advice regarding your Dogecoin Tea Cafe, though we do thank you for the question. Beverly Smith comments, not only the winter, but years of discontent. Well, I certainly hope not, Beverly, but we'll have to wait and see. And there's nothing wrong with being prepared for a bleak future, though we should always be trying to look on the bright side of life. John, any commentary on that? Because I have received actually several questions from readers ahead of time who couldn't make it to this live stream, but did want their questions heard.
Well, yes, if this is going to be a persistent environment, and don't get me wrong, I mean, I think what's happening currently, there are certain things that will hopefully be resolved before too long. But if the general situation of a relatively higher inflation environment and an environment in which corporate profits are getting squeezed, discouraging investment in the future, you could get into a persistent stagflationary environment. We've discussed this before.
Yes.
And if you believe that that is indeed what has clearly begun to unfold now, and it's not going to dissipate anytime soon, then as an investor, you really have to consider how to restructure your portfolio so that it will be more robust and produce more stable returns in a stagflationary environment. And one of the key things that you do is you rotate out of growth industries and growth companies into value industries and companies. You look for a higher dividend yield, so you get some income out of that also as you go along. You try to find the areas within value where companies have strong pricing power, and that tends to be more in non-discretionary sectors of the economy rather than discretionary sectors of the economy. And finally, you also try to get a bit lower on the value add chain. That is, rather than some sort of very innovative construction technique, you simply get into the basic materials required for construction, or you try to just get lower on the economic value add chain. And that does include more direct commodities exposure. That is, the producers of those raw commodities. And indeed, if you want to go as far as the raw commodities themselves, as it stands today, a basket of industrial commodities has never been cheaper relative to the stock market. And that looks out of line with the type of environment into which we're entering. And finally, and I always say this, but finally, you also want to have a disproportionately large weighting in gold in your portfolio vis-a-vis whatever mix of stocks and bonds, because gold does particularly well in a stagflationary environment and provides much needed diversification.
Right, we are big friends of gold here at Southbank Live. Funnily enough, I did actually receive a question ahead of time from one of our readers. It was, I believe, this letter was addressed as Dear Boaz, but maybe due to a Freudian slip, the gentleman decided to address it to Bear Boaz. So maybe I've been writing too bearishly upon the market recently. But Roger asked, thank you for your thoughts and for your invitation to ask a question. A few months ago, you did a big feature on gold. This was our 2021 Gold Summit, of which John Butler here was one of our guests. It was a very good conversation. I therefore bought some. Your experts predicted a rise in the value, but the opposite happened. It went down. I therefore question the value of the predictions of your experts. Well, we can't always get everything right, Roger. I've certainly been buying some gold as well, in fact. You're not the only one in that camp who has been maybe slightly disappointed by the underperformance of gold in recent years. However, the thing is, the problem with the gold market is gold never does what you want when you want it to. It will outside of that time, but it performs exactly the way everyone expects it to. And sometimes you get it right, sometimes you get it wrong. I certainly don't feel bad at all for owning an awful lot of gold. I bought more gold since then, but these are not everyone gets it right. It's been an interesting year certainly for the gold price, and this ties in with a question we've now received regarding bonds. But John, just in terms of your thoughts on gold at the moment, because we're in the midst of the Evergrande debacle, and you were saying a couple episodes how fear was the element that was missing from a good gold bull rally. Do you think
that's right?
Fear may be injected by Evergrande?
That's right. So there are multiple factors that not only my own analysis, but that of other, several other very prominent gold commentators. There are several factors that have very clear relationships vis-a-vis the price of gold. That said, those relationships are only significant over slightly medium to longer time frames. That is, they don't even work month to month. They work more quarter to quarter, year to year. And that's where you really see them. And one of them is absolutely the fear factor. And that's just unpredictable to the extent to which investors get concerned about their exposure to the stock market. And what I said a moment ago about how the environment in which we're now operating, you have not only price pressures being passed through the production chain all the way to consumers, but decisions being made regarding to what extent producers will accept smaller margins in order to maintain some amount of market share. And until those narrower margins become a bit more evident in corporate profit warnings and disappointments, it's going to be difficult for the stock market to take a big hit, for valuations to come down meaningfully. And we're just not there yet. It could happen anytime. And perhaps some of these announcements we've just seen this week about the supply disruptions becoming severe for a handful of UK industries, maybe this is the beginning of a major reassessment. I mean, who wants to be exposed to a firm that is going to be stuck now in a totally screwed up supply and logistical situation for an indefinite period of time? In some cases, perhaps rendering these firms completely unprofitable, unable to service their debt, at risk of restructuring or outright bankruptcy. I mean, this could begin to happen. Again, it's not a specific prediction for any specific firm, but we've kind of entered that sort of environment now, and the potential for a risk-off trade is much greater now than it was even a few weeks or months ago.
Yeah, and this comes back to the psychology of the Evergrande debacle and whether or not the CCP or not even the CCP, maybe the Fed is able to assuage fears that this won't be contained and will spill over into other assets. And this does tie back to earlier this week. We did have, of course, the Fed decision. I did note that Jerome Powell is looking incredibly old. I feel he has aged quite a lot over the past few years, certainly a lot longer than the 3 years he's been power. I probably would have said about a decade older. It really wasn't looking very good when he made his announcement earlier. I think that was on Wednesday, wasn't it? John, just in terms of what went on with the Fed and the decisions they made, of course, the Federal Reserve, it has to sort of is on a knife edge really with getting it wrong, where they're too encouraging or they're too hawkish, or they make everyone feel like maybe they're going to start raising interest rates or something like that. What was your take on the Fed decision?
Yeah, I guess it comes more or less as what markets would have expected. That is, the Fed kind of has been behind the curve with respect to inflation rising. They're remaining behind the curve. They're still trying to dismiss it as largely temporary. That said, there is, however, nevertheless, some at least greater willingness to discuss future interest rate rises and tapering of purchases and these sorts of things. We're also getting that from the Bank of England, where they've raised their inflation forecast. So yes, central banks are, the rhetoric is changing, but it is behind the curve rhetoric. It remains behind the curve rhetoric. They are clearly not yet of the mentality that they need to try to get ahead of these developments. And so you've got to take that as a signal that they're just going to let these inflationary pressures continue to build, and they're not yet ready to get serious about that. And it might be a long time before they are. I've said before, I think the mentality of the central banking community amidst all of this record leverage in their economies, I think that mentality is only going to change when it is politically challenged. And that political challenge is not yet showing up, except possibly in Germany, where I think you do now see a political challenge to that inflationary mindset that has taken over mainstream central banking in recent decades.
Right. Now, we do have plenty of questions to address, John, and we are getting off for time, but we do have a bit more time left. But John, of course, we do have the German elections coming up. This was the focus of, I believe, 2 episodes ago. If anybody watching this would like to tune into episode 11, where we went into a lot of detail here. But could you just go over your expectations for the German elections and why they're so important to investors, even if you're here in Blighty?
They're important for a combination of reasons. First of all, as we know, Chancellor Merkel has been in power for an awfully long time. She was a very, very shrewd operator. She was able to govern more or less from the center. and do a very successful balancing act in Germany for a very long period of time. That said, that balancing act did lead Germany farther to the political left, right, over time. And it's quite a meaningful move when you add it all up over time. And that includes her support for the ECB's policies and, of course, the sanctity of the euro project, and also alongside that. However, now with her leaving the stage, you find that her party is not only trailing in the polls, but they're trailing with their lowest share of the overall vote ever since the Second World War. That's a big deal, especially when you consider that the center-right parties, the CDU-CSU coalition, held the government, right, held the coalition, and therefore the chancellor's office for the bulk of that post-war period. And now they are trailing in the polls, even though she's been in power this whole time. But even the main opposition actually doesn't have a very high share of the vote. The point is the traditional center-right and center-left parties both have unusually low shares of the vote, and lots of smaller parties, some of whom have been around for a long time, a couple of whom are upstarts, look like they could form the bulk of whatever ruling coalition comes out of this election. That has never happened before in post-war Germany. It looks a lot more like what has happened in post-war Italy, a country which has been much, much more difficult to govern, and still remains so to this day. So Germany politically is starting to look a bit like Italy, and so that's very interesting. What was also very interesting is that perhaps because of a combination of this very fragile fluid political situation domestically, and inflation rising to levels that Germans have not seen for well over a generation, inflation itself has become a political issue. And some of those smaller parties can get a lot of attention for themselves in a very short period of time by highlighting that as something important to them. And then when it comes to coalition building, it could be that one of the key issues on which the next coalition is built is a position on inflation, which may include challenging the ECB, trying to get them to scale down quantitative easing, trying to get them to implement a more proportional policy that doesn't allow them to disproportionately purchase the bonds of the weaker euro area members and implied subsidy for their deficits. Germany is entering this sort of political environment. It's fascinating historically to watch because we know how important political coalitions, including the occasional minority government and high rates of inflation, have been for Germany, because that was the recipe that led the Nazis to power.
Right. Yeah, this is not happening at a very good time for the EU when its largest stakeholder looks like it is turning inward and may then actually try to hamstring some of the apparatus of the EU, like the European Central Bank and its quantitative easing program, which has managed to keep the Eurozone together for so long. If you're not a fan of the EU, you're probably going to be watching this German election cheering from the sidelines with some popcorn, as this this is really not happening at a good time for the EU at all, especially when you hear all of these talks about building an EU military now that the France lost the submarine deal with the Australians, and it's time for us to be much more military active with our foreign policy around the world. Of course, I believe the German evacuation effort from Afghanistan was really, it would be funny, but it was really just tragic because they're so woefully under-equipped. Yeah, it's not happening at a great, this is not, what is happening in Germany may be good for Germany, but it's not happening at a very good time for the Eurozone and for the EU. And it will be very interesting, as Joe described, to see what happens there. So do keep that on your radar. Now, we have had plenty of questions. We shall address a few of them here. Vincent asked, when the stock market dropped on Monday with the Evergrande scare, US Treasuries didn't budge. Are bonds now useless as a portfolio diversifier? And what does this mean for the bond market going forward? Very good question, Vincent. Very good indeed. Now, talking about US Treasuries and the amount of demand for them, we have seen yields go down over the past few months. They did climb in the earlier part of the year when there was a lot of optimism about growth. But now it's not looking so good. And as the Evergrande scare occurred, as Vincent said, the bonds didn't budge, John. So what do you make of that phenomenon? And do you think that signals something for investors going forward?
Well, it's certainly hard to conclude too much from one day's trading, but it was an interesting day, that's for sure. And I did do some work years ago looking at the relationships between stocks, bonds, and gold, and for that matter, cash in a portfolio in different conditions. And one of the things you find is that when bond yields get very low, and in particular real bond yields, that is adjusted for inflation, when they get very low, bonds historically almost universally fail to really act as a store of value, and that's kind of intuitive, isn't it? But
Yeah.
what they also fail to do is they fail to be able to counter declines in the stock market by rising significantly in price. So you don't even get the diversification benefit. So not only do you get, you don't not only do you lose the income, you lose the diversification. And so bonds lose on both counts when you get into this situation. And as an investor, then you ask, well, gee, how am I going to diversify my stocks? Do I hold a lot more cash? Well, again, if cash is yielding zero, that's not exactly great either. And indeed, the characteristics of both cash and bonds from a portfolio point of view, they kind of collapse into each other a little bit when you get into this sort of environment. And so really the only alternative to still try to have the ability to preserve power and purchasing power and diversify a portfolio is to hold more gold. I don't when I think about portfolio construction, that is not me taking some active view that gold has to rise in price. It's just looking at history and the numbers as they are and solving for the amount of gold in a portfolio that restores it to having more robust diversification and return characteristics in certain types of environment. And if you look at the type of environment we're in now, you don't want to hold merely, say, 10% of gold in a portfolio. You want to have more like 20 or 25. And that may seem an astronomically high number to a lot of people. And yet, if you do look at stagflationary periods like the 1970s, you can make a case that 25% may not even be high enough vis-a-vis your stock and bond holdings. So, these are unusual times, and we have to start thinking a bit, outside the box here in order to address these issues.
Indeed. As I said earlier, of course, we can't give financial advice on this show, so we won't be telling you to go load up and put 25% of your portfolio into gold in this show. However, this is in terms of broad informational purposes on how you might want to construct your own portfolio, things you might want to consider. Certainly, the uselessness of bonds or the usefulness of bonds, as some might say, is definitely up for debate. And if you're not getting income from bonds, one does wonder why you wouldn't own gold, because it trades so much like a bond anyway, just a better one, which doesn't have any income. Another question from Adam. How do you think inflation will affect the property market? This is a very good question, and I think it depends what sector of the property market you're in. But if, for example, we just took residential real estate, your house, how it's generally a pretty good time to be a residential real estate investor, especially if you've got a mortgage during the inflationary period, right, John?
Oh, yes, indeed. I mean, mortgages have loads of benefits, right? It's a form of secured borrowing, which results in a lower interest rate. And it's a form of inflation protection because property values do tend to rise with inflation. Sometimes they outpace, sometimes they don't, but they at least rise somewhat, right? They're not going to outright decline in inflationary environments. That would be highly, highly unusual. And so, obviously mortgages generally come with some sort of tax benefit, at least indirectly, because even if mortgage interest is not tax deductible, if you don't have to pay capital gains on property, which in many cases capital gains treatment of property is more favorable than stocks, that's an indirect benefit, right, to having an investment in residential property. So there's all kinds of reasons why having a mortgage is generally a good idea, as long as it's not too highly leveraged. And certainly in the current environment, I think that's the case. Now, that said, I would say there are some pockets of property speculation in this country that might be exposed to what has happened as a result of COVID lockdowns and what may happen as a result of of some political instability, if the winter of discontent comes to that, there may be some incentive for people to move out of the cities. And some of the highly speculative city center property that outpaced a lot of more ordinary sort of town and countryside property, that trend may go into reverse. Actually, I think that, again, I'm not a property expert, but I think that's an interesting one to watch. It
Yes.
could be that it's time to cash out of speculative city center property and focus more on more ordinary, nice, hopefully town and countryside property as a place to be, where you'll still get the benefits of having a mortgage, but less exposure to the possible downside in the city centers now.
Yes, it has been a very interesting time for commercial real estate in city centers just over the past
Oh,
year. So all the people
yeah.
who owned offices, just got completely blasted during the pandemic. A lot of people are hoping that that's going to come back now that we've got some lockdown freedoms and people are going to return to the office. But it'll be interesting if actually it doesn't and it just gets worse again because people have moved out of the cities, they want to work remotely. Very interesting sector, not a sector I would want any exposure to. But that's just me. Maybe it's actually
Well, commercial. I mean, look, commercial is famously way, way, way more speculative than retail,
yeah, owning a home.
and certainly that would be true in a big city like London. And just anecdotally, they have this fun sort of anecdotal theory in economics, which is the so-called Skyscraper Index. That is
Oh, yeah.
the pursuit of really high profile, frequently skyscraper building projects tends to be a good predictor of the economic cycle. That is, just as these big projects are finally being completed, the economy turns down and you get a recession. And guess what? 22 Bishopsgate, which I believe is the largest ever tower by far, actually. I think it's by an order of magnitude. 22 Bishopsgate is the largest tower ever constructed in the city of London, only was just completed as the lockdowns began
Right.
in 2020. And I don't think they've made much progress finding tenants since.
Yeah, the skyscraper curse is fascinating because it does seem to work every single time. By the time that they've made the highest building, just when there's no one there to actually go through the doors and do some business in there. And there are still further skyscrapers that we've got further through the 2020s that have been planned. It'll be interesting to see how they coincide with the end of economic cycles. But certainly, it's been a very, very tough time for commercial real estate investors over the past year. Trump winner says commercial to residential development will take place in cities. Yeah, I mean, there'll always be progress, and places like London are always going to have plenty of people milling around inside them. He also says, good discussion. Off to Costco today to fill up the car, plus some jerry cans. Well, I'm glad you're enjoying it. I would probably be off to Costco today to fill up the car plus some jerry cans if I had some jerry cans to fill up. I imagine the market for those is probably booming as well. B&Q, there may well be shortages of jerry cans in the future. Beverly asks, will we eventually lead into a Weimar Republic, Venezuela, or Lebanon situation? Now, those situations are quite different to each other, but we are talking, of course, about currency devaluation. John, what do you make of that? What would you say, Weimar, Venezuela, or Lebanon?
I mean, look, you can't rule it out entirely. I mean, Weimar is a situation that occurs after an absolutely massive war has totally devastated much of European continental industry, including of course parts of Western Germany, and I mean, it really, I mean, it's I don't think we're going to be going down that road now. And I certainly, God forbid, there's another sort of general European or world war. That would be horrific. But I don't think we're heading down a full-on Weimar road here. However, it would be, no one can deny how destabilizing inflation and stagflation can be for the political order. So at some point, it does have to be dealt with. But of course, it wasn't dealt with in the Weimar Republic. So I hope we're not going down that road. Venezuela has, Venezuela is a country that should actually be somewhat wealthy. They have all these oil reserves, they have other natural resources.
It was wealthy.
Yes, indeed it was. But the political culture of Venezuela has been just progressively corrupted through the decades. Sadly, similar things happened to Argentina, and I honestly do not know what turns that around. I really, really do not know what turns that around. But the political culture of those countries is not easily comparable, I believe, to the UK and to most of Northern Europe. You could say there are a couple countries in Southern Europe that have a bit more of that sort of mentality, but I don't think that's the case here.
When it comes to of the three, I would lean on Lebanon as though what if I was going to be as cynical and pessimistic as I could be, I would say Lebanon would be the one which would be the closest to maybe turning into at some point in the future. John, regarding their sort of political culture and the kind of crises, the kleptocracy that took place there. What would you make of the Lebanese situation, or no comment?
Well, I didn't mention that one, but that one is just so unique because it's also in a completely different geopolitical situation
Yeah,
where it's so unstable, and the country can't defend itself. And if there's a bust up in the region, they might be the battlefield, even if they weren't involved in causing it.
right.
So look, I mean, poor Lebanon is just in the wrong place, and I don't think you can say that about the UK, which
No, no,
which is militarily, much more able to protect itself.
certainly, yeah.
So yeah,
Yeah, I was mean more sort of on the economic financial level. We've got political elites that are involved in lots of graft and things like that. But yeah, I mean, it's a good thing that we're Britain incredible tragedies that their citizens have suffered. All being well, will Britain will remain sovereign and somewhat solvent. We do have a few more questions here, similar, and they're around a similar theme here. So Ian wrote in and says, just what is going on? We're facing an energy crisis, and yet Britain has trillions of barrels of the new carbon-free hydrogen water. Is this destined for the same fate as North Sea oil? Now, this is an interesting take. I was speaking to our energy analyst, Kit Window, the other day, and he sees these big surges in gas prices as very good because they make renewables more feasible. And he says that this is just sort of like the death throes of fossil fuels to some degree, and this is just going to empower more and more renewable rollout, and especially for things like hydrogen, which of course there is a lot of hydrogen development in this country. There's another question here, which is on a similar note, but kind of taking it on from the complete opposite angle. So this is from Jerry, who asks, will the green industry survive without the continuous flood of state subsidy pouring in? Is there any possibility that the prevailing mindset in the UK might change such that people stop searching desperately for some other parties to support the country and that Britain works more for home consumption? And will all the massive UK investment of money and resources in green technologies have the slightest effect upon the direction and rate of global climate change? By the way, I think it rich for Boris to tell the world to grow up when he himself remains an ignorant and bumptious overgrown adolescent in every facet of his behavior, with Carrie Symonds as his most influential advisor. Best regards, Jerry. Well, thank you for that letter, Jerry, and indeed from Ian. Probably wouldn't comment on that last bit too much. But John, when it comes to green industries and green industries surviving or thriving in this kind of environment, any comment on that?
well, yes, indeed. I mean, the one of the big issues that the green industry has is that it has, over a long period of time now, overpromised and underdelivered on what people thought was possible, notwithstanding a huge amount of brain power involved in it, right? Some of the cleverest people at the universities and coming out of the universities and in private engineering firms, have been working on trying to find ways to make green energy viable without some dependence on subsidies. And no matter what road they've gone down, they have not made as much progress as they had led us to believe. And so I think it's natural that people are becoming a little bit skeptical here as to whether we should hold out as much optimism as we previously had. I wouldn't have zero optimism, but I just think we need to be a little, some healthy skepticism here, I think is warranted. Now, that isn't to say that I don't acknowledge the fact that the world cannot rely on fossil fuels indefinitely. I do think that some diversification into other sources of power is a sensible thing to do. But the idea that you can force it through with government subsidies and somehow make it all work is a very dangerous idea, actually, in my opinion. And keep in mind, the energy shortage we're seeing now has nothing to do with the available reserves of fossil fuels in the world. Absolutely not. There is plenty of it out there. There is so much oil and gas that is still in the ground and indeed still being discovered that we remain, by most sort of reasonable, robust estimates, even at current rates of consumption, we're still a century away from a true crisis. Now, those who believe that CO2 released into the atmosphere is of deep concern for climate change, that's a separate issue. But energy availability is still there. It is still there. And what's causing the gas issues here in the UK currently, those are very UK specific issues, right? Russia is more than able to supply all of Western Europe with the gas it needs. And indeed, Nord Stream 2 will make it even easier to do that. And if the UK got serious about continuing to have energy flexibility, one thing they might consider doing, in the same way they have the undersea cable for transmitting French nuclear generated electricity to the UK, they might like a new pipeline to generate more Russian or other source of gas to the UK to make sure that supplies are more stable in future and we don't have sudden spikes like the one we're seeing now.
Right. When it comes to renewable development, do you think these surges in gas prices are going to lead to only more subsidy or only more?
Not if it's temporary. Not if it's temporary. If it's just a temporary phenomenon, I don't think it will really affect things that much. I think if it becomes persistent, then people are going to have to start thinking, well, hold on, how are we going to solve our energy requirements? But the problem is, if you're simply going to go more dependent on green renewables that are uneconomic and require subsidies, then the only way to keep developing that is for taxes to go up. So fine, your energy bill might not go up, but your taxes do. Net, you're still paying more. I mean, that's not a real solution, in my opinion.
Right. And in terms of UK investment in green technologies, do you think they will have the slightest effect upon the direction and rate of climate change?
Look, the UK economy is roughly 5% of the global economy. The UK also has a relatively small manufacturing sector. The idea that the marginal consumption of CO2 related energy in the UK is going to affect the global climate is so out there. I wouldn't know where to begin to support that. Now, you might support it by saying the UK has political influence. Okay, maybe they do. Show me the evidence that the UK's political influence has done anything to reduce the increased consumption of CO2 energy in India and China that now consume combined more, I believe, than the United States. I mean, really? I mean, I just don't see evidence for those claims. Again, I'm not suggesting that climate change might not be a problem for the world. I'm simply saying that the specific claim that developments specifically around the margins in the UK have a meaningful effect on the world's climate, no, I don't think they do.
Yeah, there was that second question from Jerry there, which is regarding is there any possibility that prevailing UK mindset might change and that Britain works more for home consumption? That's quite a specific question. I would like to tie it in actually when it comes to with another question from Lemonade 22, who says, should Britain follow the US to exploit shale gas? Now, there was an attempt for this to occur in Britain, but because we've got a very strong environmental lobby, and there were plenty of fears that it was going to lead to earthquakes and various tremors, that didn't come to pass. But when it comes to sort of exploiting your own natural resources, John, and becoming more sort of self-sufficient, obviously, we probably would need to then ship the shale over to another refiner outside the country, though maybe not actually, considering the North Sea connections we've got. But just in terms of Britain following the US in that route, do you think we may end up seeing fracking in the UK, maybe as a result of all the issues we've seen this year?
I think it's possible at some point it happens, but it's interesting you say the UK following the US, when in fact, in a way, it's almost more like the UK following Germany. Germany has a far more powerful green energy lobby than almost any country in the world, and they're now seriously discussing expanding their dirty coal production to provide a backstop against the occasional winter spike in power requirements. So if Germany's having that serious discussion, I think it's totally understandable that the UK begins to have a serious discussion about about shale, which in theory, I mean, I've seen some estimates that are actually pretty impressive regarding the size of the UK's potential shale production. And look, all of energy and all of economics, for that matter, is about trade-offs. And if people in this country are not willing politically to support a general increase in their expenses, be they directly for energy or indirectly for energy subsidies via higher taxes, and if they're concerned about the UK's food independence and food industry, because of course agriculture is an energy intensive industry, whether you like it or not, okay, if they think that somehow cheap shale energy will not only make energy itself cheaper, but food cheaper, some green oriented people might see that as a reasonable trade-off, right? So I think it's almost inevitable that at least the topic goes more mainstream, and rather than just dismissing it as, oh my God, we couldn't do that because it's dirty, I hope it's more seriously discussed as a trade-off vis-a-vis other options that may or may not be even less palatable than becoming somewhat reliant on shale production.
A very measured and reasoned answer, John. I think that definitely does address the question. We have got several more questions and comments in the chat. I think we shall address these in the next episode that we do with John for Southbank Live. But as we have gone somewhat into overtime here, now it's an hour and 7 minutes into this. We're normally trying to keep them contained to an hour. But this has been a very productive episode of Southbank Live. I've really enjoyed this. We've had plenty of audience interaction, which is always great. A big thank you to everybody who did comment, ask questions, even if they're negative, positive, or we enjoy feedback of all varieties. If you're watching this as a recording, do feel free to leave a comment below this. We shall read it. Or if you have any questions for our next episodes, our future episodes, or topics you'd like to see discussed, do feel free to just leave that below. But we shall leave it there for episode 13 of Southbank Live. John, thank you so much for joining me.
My pleasure as always.